we just kind of hit on some of the volatility, talking about the VIX there for a second. I have to ask you, of course, you have a lot of clients. How does this impact how you're balancing portfolios? Last time you were here, you were 60% equities, 40% cash. Has that changed meaningfully?
Well, it has. We jumped back in the market a little bit because we had a change in the trend, which was very positive. The two things you don't want to fight: don't fight the Fed, don't fight the trend. And they usually they basically coincide with each other. But we did have a good call there in January. We were about 100% invested in January, and then February we felt good about the market. But then with this banking crisis a week ago, that completely changed our outlook, and it did hit a lot of our stops, Frank. It's pulled us back out of the market quite a bit.
Right.
The market is teetering on the trend going negative. The 200-day, the S&P's below the 200-day today, and I'm telling you, a lot of managers look at that because it's an important indicator. Our trend indicator is right there teetering on whether it's going to hold or it's going to turn negative. And I'm not real optimistic right now. And you know me, Frank. I've been with you quite a while. I'm the most optimistic guy in the world.
You certainly are.
I'm always a bull. But now's not the time to be bullish. You've got banks that are imploding. It's a stressful time.
Yeah, I talked to you yesterday. You were at the coffee shop. You said you might have to hit the bar the way the markets were going.
Yeah.
It was a very volatile day. I want to run something by you, Vance. So J.P. Morgan out with a note yesterday saying the delayed effects of the Fed's tightening policy is stressing financial conditions. J.P. Morgan says headwinds to credit growth could cut up to 1% off GDP in the coming quarters, and the Fed will push the economy into recession later this year. J.P. Morgan also believes the Fed's not done yet, expecting a quarter-point rate hike next week and a final move in May. So a lot of talk about that move next week. Will it be 25 basis points? Will it be no move at all? What's your take on what J.P. Morgan has to say?
I think they have to do 25. I think if they don't do 25, they lose credibility. And I think if they don't do 25, it signals to the market that we got deeper problems than what they've been signaling that we have. And like you and I talked about yesterday, Frank, when you have your banks imploding, that's that Houston, we got a problem call. I mean, when you have that's the death threat.
That's not great.
That is the worst that can happen is when your banks start imploding. You can have your garden variety bear market. They come and they go. But when your financial system starts to break like this, then we got some real problems that you really need to pay attention to. And investors need to really wake up to this because 2008 was a real ordeal when banks literally, you woke up one night, Bear Stearns at 38, woke up that morning and they're $2. So. All
right. So before you hit the bar yesterday, we were talking, you said the 60% of your portfolio right now is in equities, mega cap tech, including the triple Qs. We saw Carl Icahn earlier this week saying the valuations are just too high. What's your take on that?
Well, like I said, I'm 40% in cash, so I guess he and I are kind of in the same page because I think Carl's invested too. I know he's not 100% in cash either.
Right.
So the point being is I like the mega caps right now. They're holding up better than anything else. Value and dividend stocks really took a beating, and that's really stopped us out because we had some of those holdings, Frank, and they stopped us out over the past week and a half or so. But I think you're seeing a rotation, too, from value into tech because tech got beat up really bad in 2022. So I think that it's a good place to park money. It's holding up better than a lot of other areas of the market. But then again, a 1-month to 3-month treasury is looking pretty attractive right now, too.
Yeah, your pick for us today is the ticker BIL. It's an ETF that does 1 to 3 month treasuries. But in your mind, it's basically cash.
Basically. Okay. But I know it's boring, Frank. I know that it is. But you know what?
Safe and boring right now is A-OK.